Okay, so today is December 7th, 2022, and the Bank of Canada just increased the interest rates by another 50 basis points. We are sitting at 4.25% at the moment. We started the year at 0.25. So there's been an increase of 4 percentage points, 400 basis points if you look at it from that perspective. So the question is this the end or the beginning of the end to the interest rate hikes? And if it is, what does that mean for the buyers and the sellers and general public sentiment for 2023?
Yeah.
It's a big topic, but let's see if we can cover a couple of the items.
So interest rate is one of the elements, of course, that affects the real estate market. But there's many other things as well. We'll talk about interest rate, but there's my
Yeah.
other thing that look at immigration. Immigration is stable. We're expecting a lot of people coming into Canada in the coming days, which are coming in, like
Yeah.
who haven't come in the last couple of years. The job market, it's stable.
Yeah, it's strong. If
Yeah.
anything, it's
Yeah,
actually pretty strong.
yeah.
Yeah.
Inflation, we're still waiting for the numbers to come out for November, so we'll keep a tight eye on that. Let's see how that pans out.
Right.
And I think the overall general global situations, they affect the real estate market as well.
Flow of money, right?
Yeah.
That's what it is at the
How
end of
is,
the day.
how is money getting in and out?
That's
so,
right.
but the most important thing right now that we feel, which emotionally affects a lot, is this hike that has been happening over and
Yeah.
over and over again.
Absolutely.
So if this is the end, so let's talk about how will it affect buyers and sellers, and what should they do?
Yeah, so based on our experience over the last few months, given the uncertainty where this interest rate hike would go, there were a lot of buyers and sellers who are still active, but at the same time they're looking for a deal or for a bargain
Yes.
that they didn't have the opportunity to get, prior to early 2022, and what does it do? I think we talked about it a few weeks ago. Is that it has basically frozen the market.
Yeah.
People like to do something, but they have decided that they're not going to do much until they have some stability in terms of where these interest rates are going to go, because that was very much directly, related to the overall psyche of the market.
So if this is the end of the hike, so
Yeah.
that means that next year, or in the coming days, it will the general sentiment will be stability.
That's it. That's it. I think people like to work in a stable environment. And I think with the latest increase, and again, hoping that this is one of the last ones, if not the last, for the time being, that will start creating some, stability in the market sentiment. I think the buyers who have been sitting on the sidelines trying to get a deal, I think this is probably
This is the
a
time.
very good time to basically say, hey, we might have, or we are probably very close to hitting bottom
Yeah.
in terms of the market, because the market, especially in a city like Toronto, it shifts very quickly as well.
Very, very quickly.
So I think, some of the conversations that we started having with some of our clients was exactly in that kind of a mindset that we probably are reaching the bottom of the market, given that the stability, hopefully, from an interest rate standpoint, is on the horizon.
Yeah.
What about the sellers?
Sellers, same thing, like, the general emotion, that conversations that we've had with our colleagues as well, like, everybody's been advising their clients that, hold off, let's go on the market in the new year. So
Yeah.
I think there's going to be tons of activity in the
Yeah.
new year. A lot of listings are going to come out. We're going to have hopefully a decent inventory.
Yeah, because what we have seen over the last 3 or 4 months is that there's not a whole lot of new stuff coming out. One of the reasons that we're not seeing a lot of listings on the market, but that people thought would be the case, given how expensive the borrowing is at the moment, is that people would basically run to the market and try to get rid of their properties before the market would go down even further. I think we haven't seen that.
No.
I think one of the reasons for that is that people are still employed.
Yeah.
People still have jobs.
They're
If
still able to
anything,
afford
the
it.
job market is actually even stronger than what it was a couple
Yep.
of months ago. So when you look at it from that perspective, we haven't seen the market getting flooded by new listings, which has, I think, kept the prices somewhat stable as well.
Yeah.
I think the data. One more thing I think we should definitely talk about is that on a year-over-year basis, over the next 3 months, we're going to see some pretty stark data as well because the market was
Quite.
at its peak in December, January, and February
Yep.
last year, right? And when you look at it from a year-over-year basis, when the data comes out in January and February, that might look a little bit depressing.
Depressing.
But having said that, I think overall, we believe that the market is probably starting to see some stability.
Stability, and we're going to see lots of activity in the new year.
I think so.
And I think another thing is that, you know, the
And we're not
Aussie.
predicting it though. Sorry, I interrupted. We're not
No, we're
predicting
not
anything.
we're
It's
not
just an
predicting.
opinion.
This is just our opinion. And I was going to say that, you know, another thing that I think we were talking about that the government is considering looking into is the OSFI rule for qualification.
Yeah,
And
the stress test.
the stress test.
Yeah.
And in case that is reviewed, brought down, or removed,
Adjusted
or
slightly.
adjusted, whatever, anything, that will make a huge difference.
Yeah,
If
and
that
again,
happens, that's going to be a good
because
one.
right now, regardless of where the interest rates are, you're probably looking at a qualification rate of about 8%, which is significantly high
Very
at the
high.
moment, right? So let's say if that rate comes down from 8% to 7%, let's
Yeah.
say, without,
Affordability changes, right?
the affordability changes, absolutely. And when the affordability changes, the market starts reacting the same way as well then.
Yeah.
All right.
Okay.
Again, no predictions, but
Just
just an opinion
opinions.
in terms of what 2023 might have in store for us.
I know. And for you.
Yeah, absolutely. I think stability is what everybody's looking for,
Yeah.
and I think once the market stabilizes somewhat, we're going to start seeing a bit of a more balance between the supply and demand as well, and I think we're going to see, I think, a little bit more activity in the early parts of spring.
I do see stability.
All right.
All right.
That's it.
Bye, guys.